All right, I guess everybody should be able to see my screen now. Okay, please confirm if you can see my screen.
Yes, we can.
Okay, thank you, Victor. So we are going to talk about withholding tax today. So I remember I told you guys to read it, but I don't know if you guys went through it or not. Okay, so we are going to be breezing through today. We want to finish it today. So it's going to be like a breeze through. So now before we even talk about like what is in the material, one thing I want you to note about withholding tax is that withholding tax is not a type of tax. It is not, like we have like personal income tax, company income tax, we have direct tax, indirect tax. Um, Under each we have all of these things, but withholding tax is not a type of VAT, tax. A type of tax is merely an advance payment of CIT. Like what when we have prepayment, you've paid for a service you have not provided. I mean you've paid for a service you have not enjoyed. Yeah, that's the word. Um a prepaid company income tax. That's what we call withholding tax, right? Because every company has their accounting year end. Most do December 31st, and we have June. Usually we have June 30, December 31st, right? Then maybe April or March of every year. But the thing is, the government cannot wait for everybody to now finish their accounting year before they pay. That means the government money is going to be seasonal. In December, government will have money. In June, government will have money. In let's say April or March, government will have money. What about the other months? No money. Like we don't. It's going to like should I say reduce the income stream. But withholding tax is just like a way of collecting CIT before the accounting year end of the company. Something quite like that, sha. So now withholding tax is deducted at source from payments made to a taxable person for supply of goods and services. It's an advance payment of tax offsettable against any subsequent tax liability of the recipient. In some instances, withholding tax is the final tax in the hands of the recipient. So now what we are trying to say here is that the way withholding tax works is like it's just like the name withhold. Somebody is withholding your payment. So let me make a very good example. Let's say Maureen and I entered into a contract, right? I am the let's say I sold good to Maureen, and let's say good worth 3.5 million. So now Maureen is going to pay me 3.5 million, right? She's supposed to pay me 3.5 million. But if she wants to help the government to withhold tax, let's say 10% now, 10% of that money will be withheld, which means she will only pay me 3.5 million minus 10% of 3.5 million. So I will only be collecting net of that money and not the gross amount that she's supposed to pay me initially. Do you get? So it's like the person that will pay you the money, that person that will pay you the money is the one withholding the tax. I hope we understand. So it is withheld by the buyer. The buyer that is supposed to pay you for your goods and services. And just like you are a seller to somebody, somebody is a seller to you. So just like somebody is withholding your own money as tax, you're also withholding somebody's money as tax, right? So now what we do is when you calculate your company income tax liability, then you will remove the withholding tax that has been what withheld on your behalf. When the buyer withholds your money, it's supposed to issue you a tax invoice, and that tax invoice is like evidence of what of that particular tax that was withheld when you had contract with the person. So now that evidence is what you're going to use to tell the tax authority that, oh, I've paid before. I've paid like CIT in advance. Then when you now calculate your CIT at the year end, you remove that particular amount of withholding tax for what? From the CIT. Then you pay the balance. Okay, so that's what we are seeing when we said that it is offsetable. That is, you can offset withholding tax um against your tax liability. But in some instances, withholding tax can be the final tax. So when we get there, we're going to talk about it. So finance 2021. Don't know why I put three in this one. So according to the Finance Act 2021, FIRS may direct that the company's CIT can be recovered from the money payable to that company. It's just like we are talking about how the buyer is going to like remove money before paying you the remaining money, right? Even if a formal assessment has not been issued. So they can instruct the third party who makes payment to a company, e.g., customer contractor, to deduct and remit tax from those payments. I think I've explained this one before. Then the directive can be to all companies, to a specific company, a class of company, or to all person, a specific person, a class of persons making the payment. So what we're trying to say is that the withholding tax is not only it's not only done by companies, it could be by an individual, like a sole proprietor or a partnership business. Do you get? So don't know why I have to be here, honestly. So we have peculiarities of withholding tax. This like what are the things that are common to withholding tax? Number one is a mandatory deduction. Taxpayers cannot opt out. They are legally required to deduct withholding tax, and failure to deduct this, it attracts penalty. So you're not going to say that, oh, how much am I paying this person? How much gain? Truly, sometimes you sell stuff, and even though if you hear the revenue that the person is collecting, 5 billion, but the profit on that 5 billion might be so small, right? So you as a buyer will not feel like, oh my god, how am I supposed to remove withholding tax from this money? And I know very much that the profit is not plenty. It does not concern you, Okun, it does not concern you at all. You're not supposed to care about the person's profit or the fact that the person is going to receive it less than what they ought to receive. You are mandated to remove the withholding tax before you pay the balance to the person. It is not an optional choice. It's something you just have to go with. Then number two, it is an advanced income tax payment. You can utilize it as tax credit against income tax liability for the relevant. Who is that? Unutilized withholding tax can be carried forward and set off against future income tax liability. So we are saying that in cases when the withholding tax that has been deducted from your money is above your tax liability, that's right. Maybe, for example, the withholding tax um, that has been deducted by your suppliers or contractor is around like 1 million. And when you calculated your tax, you saw that your tax was like 650,000 naira, which means you have more withholding tax than your actual income tax liability. So in that case, you can carry the remaining amount, that's 350,000. You can carry it forward to what the next accounting year to offset the next what tax liability. Then number three, final tax. In some situation, withholding tax represents the final tax, right? Which means that if you have deducted withholding tax in such situation, you are not expected to tax that particular income anymore. So now, objective of withholding tax, it helps to discourage, minimize, or prevent incidents of tax evasion. That's usually number one thing. They don't want people to carry away their money. Now, to widen the tax net of the government, like I've explained before, government will not have to wait for you guys now to besides some people, they are not even tax compliant, right? They're not tax compliant. But now, if your buyer knows that you are supposed to be paying tax and you're not paying tax, it does not even concern your buyer whether you are paying tax or not. What concerns the buyer is his own duty to do what? To deduct withholding tax, right? So now it helps to widen the net, which means the people that government does not even know that they're in existence, buyer will deduct withholding tax from them, right? Then it serves as what? A verifiable source of revenue to the government. Like I said, it brings in money. It brings in money, right? Who is that person that has been disturbing us? Um, Now it serves as a collection mechanism for income tax. It's quite similar to okay, what I've been explaining before, because the main reason why withholding tax exists is just so you can receive income tax in advance. Do you get? Now, which tax authority is responsible for withholding tax, the administration, collection, blah blah blah? Now, SIRS collects withholding tax from individuals and unincorporated business residing in the state during the year of assessment. Which means that if you are residing in Ibadan and you are an individual, or what are the examples of unincorporated business that we have, please? Examples of unincorporated businesses.
So proprietary
Sole proprietor. Yeah, another example.
individuals.
Apart from sole proprietor, which other unincorporated business do we have?
corporate
Individual.
Eh? Sorry, I didn't get that.
of that one. Oh. I said corporate society.
Hmm. That's cooperative society is not a business now. It's just like a non-profit, something like that. Um, so we have partnership. Partnership can also be an unincorporated, as long as it's not a corporate company. When we say corporate company, it's like limited liability, PLC. So those ones are corporate. Enterprise, yeah, enterprise. Thank you, Uche. So yeah, so if you are an individual or you are unincorporated business, you are going to be liable towards SIRS. But the FIRS collects tax from what? Corporate bodies. That's when we are talking about the public limited company, private limited company, then military and police officials, external affairs officers. Those are the people that the FIRS will attend to. But with effect from 2015, FCTIRS, no, we now have FCTIRS now, is responsible for collecting within tax. Yeah,
Sorry, you say FRS collects withholding tax.
mm, to corporate
Are they the only
bodies.
people that are they the only people that collect? I thought the tiers of
No,
government also collects the three tiers of government.
is two SIRS and FIRS. I already spoke about SIRS before. Then FIRS for corporate bodies. So are we together? Okay, so now for FCTIRS, they collect withholding tax from non-residents and residents of both Federal Capital Territory. On interest savings, be savings interest. When you put your money in the bank for quite a while and you don't remove the money, I don't know if your bank pays you, but my own bank used to pay me, UBA. They will pay you interest on public debt, something like that. So, or even if you own shares in companies, right, or they were interest, and they pay you interest or dividend, you see net of withholding tax. Some will write that they have no withholding tax, so some will just put in net of dividend or net of withholding tax. You see it there. So now, in that particular case, when you receive interest or you receive dividend, the shares that you bought can be for any company, and the company can be anywhere. In that instance now, who is going to withhold tax, and in what branch, in what place would the tax be what administered? Like we're talking about, is it going to be from the place where the company that paid dividend will be, or the place where the recipient of dividend will be? I hope we are good. Are we together? Ma, are we using, I think, I didn't see that. Are we using NRS right now? I don't understand your question, Uche. Are we using NRS as our God? Um, guys, If I trail off, just somebody should unmute and try to should I say bring me back or tap me out, because uh I cannot really explain what's happening right now, but I don't know that I'm feeling somehow funny. So if I should trail off, please somebody should find a way to make a loud noise. Okay. So now that interest savings that I was talking about, or dividend, the relevant tax authority that will collect withholding tax is the tax authority of the place where the branch of the bank paying the interest is located. So let's say let me use myself as an example. I received interest on public debt on my savings. I have a savings account at UBA, and they paid me the interest on public debt. Now, which tax authority is going to collect the withholding tax on that particular interest? It's going to be the tax authority of the place where my bank is. Which bank am I using? UBA. Which branch am I using? I'm using Challenge branch. That's where I use Challenge branch. So now the tax authority that covers Challenge branch, and of course I'm an individual, is going to be what? The one that will collect the withholding tax on the interest, which is going to be, I think, I'm not sure, I think Adeoyo, so there's a FIR that Adeoyo, now Henaresa. So now person is required to make deduction at source. In this instance, you should know that not everybody can remove withholding tax. So it's not like somebody will now they'll sell you something, they say that I remove withholding tax. It's a lie. It's not in all transactions, and it's not everybody that even have the capacity to deduct withholding tax. For the purpose of regulation, the following persons are required to deduct tax as source. Please note that tax as source is what is withholding tax on eligible transaction. Number one, body corporates or incorporates other than individual. So a body corporate, which is a company, you know, limited company, a company that their name end with limited or PLC, right, is a body corporate, or incorporate, which means an incorporate business, like we said the example earlier, other than an individual, like an individual, let's say sole proprietor enterprise. But you're an incorporate and you're not an individual business. For example, partnership, you can deduct withholding tax. Government ministry, departments, or agencies can do that. A statutory body, public authority can do that. Any other institution, organization, establishment, or enterprise, including those exempt from tax. So even if your institution is exempted from tax, you are still going to deduct withholding tax from the supply you make to customers. So I mean to supply customer make to you. Um, a statutory body, public authority can read that. A payment agent representing any person that under A to E is 1 to 5, right? Which means that this payment agent is going to do what? It's only going to help you to make some payments. And as long as it's representing any of these bodies that we have called, that we have like spoken about before, the person would have to what? Deduct withholding tax. A body corporate being a small company as and a body corporate of a various exempt from the requirement to deduct tax at source from any transaction. So we are saying that a small company or a body incorporate, that when you say body incorporate that has the same attributes, we are saying that a small company and an incorporated business that has the attribute of a small company, that is, their turnover is less than 100 million, or how much? Is it 20 million, 25 million? Yeah, the previous one, 25 million. So if you are a body incorporate and you have the same like issue, um then you are not required, you are exempt from what deducting at source. So for those that they will have to deduct at source, they have to ensure the following. Number one, the supplier has a valid tax identification number. Remember that the supplier is the person that gave you the goods and is expecting you to pay he or she back. So you pay them back, but you have to have removed withholding tax. Number two, value of transaction is 2 million or less during the relevant calendar months. So we have the withholding tax rate, withholding tax rate, dividend or interest. So yeah, we have corporate recipients. That's why we're talking about companies. We have non-corporate residents. We're talking about residents, non-corporate recipients. So which means that if you're not a company and you want to do this are your rates. So we have residents and non-residents. Dividend and interest are together. We have 10% for everybody, whether you are here or you are not here, is everybody. And it's 10%. Royalty for corporate people, 10%, for non-corporate like individual, 5%. Rent, hire or lease, 10%. Commission, consultancy, technical management and professional fee, 5% for company, 10% for what non-residents, or for non-corporate, it's 10% for non-residents, 5% for residents. Okay, it's the same thing actually. So for supply of goods or material other than the manufacturer or producer, so it means that I hardly see this one sha. It's 2% for residents. It's only for residents and not non-residents. Um, shall let us go through it sha. Supply of goods, co-location, telecommunication towards service. All these ones that all the must summary. This one, rendering of or supply of service other than those specifically said in this schedule. 2%, 12%. Um, Version of good, any form of um not us to just
Will this thing be given to us in exam in case if there are questions?
they'll not give you I don't think I did not see it there I don't think they'll give you. You have to know it. I don't think I saw it in the past question. It was not there. So you have to know it. But usually the common one that they bring out is dividend or interest. It could be this 1, 2, 3 are quite common. The first three. Then I think this one to director. This one, director or what is director? This one, director's fee. 15%, 20%. I think I've seen this one in picture or somewhere. Director's fee too is there. So the first thing is for you to determine is the person a company or an incorporate and unincorporated business. So when you see a question, you first have to ask yourself, is this an unincorporated business? Is this a corporate business, right? So you know. And of course, is it a resident or someone that just came in? That also depends on what it does. Um Now contract or supply. Please, are we still together? I thought
Yeah,
ah, I'm not ending call. I thought FRS had been scrapped. Not, I've already explained this before, Uche. I don't think you guys will be concerned with all these things. But yes, you are correct. FRS is now NRS. But actually, in your exam, because this NRS was implemented since last year. So if we are looking at 6 months after implementation, I think you should be saying NRS and not FRS because it's already 6 months and there's high chance you might be tested on that or you are not expected to write FRS anymore. But that's you have a point, Uche. Supposed to be NRS. It's FRS is now NRS. Okay. I was talking about contracts of supply. It covers all form of supply deliveries or the like through competitive bidding, tenders, LPO, whether written or oral. It does not cover the across counter cash sales or supplies in other course of business. Contracts, which is outright sales and purchase of goods and property in the ordinary course of business, are exempted from withholding tax. Now, let's talk about this withholding tax because it's very important that you understand. When you talk about your normal sales and purchase, for example, let's say I sell provisions. If Uche come and buy cornflakes and milk in my shop, I'm not expected to Uche is not expected to remove withholding tax from my money because that one is like across the counter. Like, you know, they already said it as across counter cash sales. That one is across counter or the normal sales. I sell cars now, for example. Car is what I sell normally. If I sell a car today, that's like my good. It's like the gari that somebody else is selling. That's normal ordinary course of business now. What do you come up? That's normal sales and purchase, right? Normal sales and purchase. But now I will now want to collect supply of car, like more than one car from abroad. A fleet of cars are coming, and you know that's constitutes like a a contract supply, right? So then the me that I want to pay to my clinic and remove withholding tax from the money before paying to my supplier. So, but you put at the back of your mind that the normal sales, the ordinary course of business is exempted from what withholding tax. It's only what when we have a competitive bidding or a huge supply, where you have to submit tenders and local purchase orders and so on and so forth. Okay, exemptions from withholding tax. So some stocks are exempted from, which means you cannot deduct withholding tax from them. Number one, compensating payments under SITA is exempted. Distribution or dividend payments rate or rake. So if these people pay you dividends, you are not expected to move to the who is that person? It's the person trying to talk. Mary, what's happened?
So
Okay. I want us to finish this thing, but God, I'm not feeling good. Oh. I feel very dizzy, but I want us to finish this little tax. I don't want to make it tomorrow. Across the counter transaction. I already explained what across the counter is now. When I said Uche came to buy conflicts from me, that's like across the counter, your normal sales purchase. Interest and fees paid to Nigerian bank by way of direct debit, which I don't remember. Ah, so you paid fees to a Nigerian bank and you know they paid interest or something to your bank and you do not remove the money, it's there, exempt. Good manufactured or purchased by or produced by the person making the supply. So when you are the person supplying you, it's locally manufactured goods that you are being supplied, locally manufactured, then exempt. Imported goods where it does not create a taxable presence in Nigeria for the foreign supplier. So we are saying that the supplier does not have a significant economic presence, so you can exempt the person from withholding tax. Okay. Any payments in respect of income that is exempt from what tax. So if you exempt these payments from tax, then you are going to do what exempt it from the income from tax, then you exempt the withholding tax as well. Out of pocket expenses that is expected to be normally incurred by the supplier or distinguished from contract fees. So it means that sometimes if you want to like receive a contract, you have to pay some money, expenses. Those expenses are not expected to pay that you with the deduct withholding tax, or you yourself that you want to pay the money. Please don't deduct withholding tax. Then supply of the LPG, blah, blah, blah. Commission collected by a broker. None of this winning of from game of chance. They are exempted. Criteria that constitutes what ordinary sales in ordinary course of business is. So they are confused about how will you recognize sales in the ordinary course of business. So they are not telling you that this is what it constitutes. Please give me a minute.
Hello, are you still there?
We can't hear you, Madam Onyinye. Are you there? She said we should give her a minute.
Yeah, I'm back. Thank you. I have to take a sip of water. All right. So now, what are the things that constitute sales in the ordinary course of business? No, remember that sales in the ordinary course of business is what is VAT, withholding tax exempt. Sorry. So if it's not a contract supply or contract of supply, you're not supposed to what charge withholding tax. But how you now recognize this thing? This is ordinary course of business. So in the question, you write it there, like you write it there. But just in case it is not explicit, these are the things that you can use to recognize. Number one, the inclusion of transaction of or activity in the object of memorandum of association. So if that particular transaction is part of the things that you said it in your memorandum that this is what we are going to be doing, we are going to be selling rice, we are going to be selling beans, and then you actually now sold rice, then that rice that you sold is sold in the ordinary course of business and not what a contract of supply. Number two, nature and practice of taxpayers, business and industry. So in that person's business or in that person's industry, what do they constitute as what? Sales in the ordinary course of business. Number three, history of taxpayer in relation to the activity. Does the person sell the the item quite often? Do I sell complex all the time? Or just one off? You have to consider that. Frequency of the type of transaction. How often do I sell? Just like I said, they one off or frequently sold goods. The obligation to deduct as source shall arise at the earlier of when payment is made or the amount due is otherwise settled. Now, when are you supposed to deduct withholding tax? Number one, when the person that you want to when the buyer now, yes, when the buyer pays, as soon as the buyer pay, uh, we expect that the payment is already net of withholding tax. Or sometimes it can be a credit transaction. When it's a credit transaction, then the obligation to deduct will be when the person pay their due. But it allowing already. So when you now pay the money that or the money no that you got on credit, when you pay it back, then as soon as you pay it back, you have to deduct withholding tax. In the case of payment due between related parties, I hope you guys know what related parties. I think I've spoken about it before. So, related parties. Deduction shall be made at the time of payment or when liability is recognized, whichever is earlier. Remember that related parties, these people know each other. They are somehow connected, right? So because of that, it's either when those people pay, parents sold to subsidiary supply the particular thing to parents, so you deduct withholding tax either when you have paid, when you pay, or when they recognize the liability, that is, they have already incurred liability for one another. Maybe parents have incurred liability for subsidiary have incurred liability for what? Parents, any of the two. So whichever is earlier is what you are going to, is when you are going to recognize the withholding tax, or you're obligated to deduct. So now receipt for deduction, like I said, remember that it is the buyer that bought something from you that will remove this money before paying you the remaining. How are you now supposed to know that this person has actually removed your money? Like, with what evidence, right? So now, if a person deducts withholding tax, they are expected to issue what? Receipts of the tax deducted. And they're expected to give you a statement in the prescribed format. And that statement will contain this following information: the name, address, and TIN of the person from whom deduction was made. TIN is what? Tax identification number. Where the beneficiary has no TIN, NIN for individual, and RC number for company. RC number is registration number, the one that is on CAC certificate. You get. Number two, nature of the transaction in respect of which payment is made. Which type of transaction did you make with the person that you want to pay money to? Gross amount payable or settled, how much did you pay? Amount deducted, how much is the person's withholding tax that you remove? Month to which payment relates. So this withholding tax, did it relate to last year? Did it relate to this year? And so on and so. But now, this receipt is then submitted to the relevant tax authority as evidence of the amount deducted for the purpose of claiming tax credits for the amount deducted. So it means that you have to what? Give tax authority and tell them that, oh, somebody have deducted withholding tax on my behalf. So like you need to do what? To be able to claim it. Where a person issues receipt for any amount deducted and yet to be remitted to the relevant authority, the beneficiary shall be credited by the relevant tax authority, and the amount so remitted shall be treated as tax liability to the person who made deduction and shall be recoverable with applicable penalty and interest. So now what we are saying here is that let's say Uche, I supplied a particular good. I don't know the type of good. I started supply good to Uche. So because Uche is the buyer, Uche is the one that will pay me my money. Uche is mandated to do what? Deduct withholding tax. Uche is supposed to deduct withholding tax, right? So now, Uche, I don't know whether Uche deduct it or he did not deduct it, but he paid me my money net of withholding tax. Uche is supposed to go and that money that I collected from me, he's supposed to take it to what? To the tax authority and go and pay. You file and you what? You remit. If Uche now decide that, oh, maybe me, I'm too busy, oh, or you like, let me use tax authority money to eat pepper soup. That's Uche's own. No. What they're not saying is that the tax authority will treat that transaction or that withholding tax as if they have received the money. They will not credit me that I'm the supplier. They will credit me that withholding tax have been removed from my behalf, even though the person that removed the money has not come and pay. So they will not credit me that I've paid, and they allow me to be able to remove it from my tax liability. But for the person that Uche that the daughter withholding tax that refused to go and pay, they are going to add it to his own tax liability that this person has hold his tax authority a particular amount. I hope you get it. Procedure for filing withholding tax and the time frame. So how do you file and when are you expected to file? Now, you are supposed to do what is called schedule of withholding tax payable. This schedule, I think I've seen it once, or I've seen it physically, like in practice once. I was not really like it's I did not really understand it because I didn't have time to go through it. Sha. So now you prepare the schedule of withholding tax, and how do you prepare it? You apply the correct withholding tax rate on each transaction or payment made during the month. Then a check will be what will be share raised to FIRS, then forwarded plus this withholding schedule. Remember that withholding schedule is like you are trying to give them that this is what I've deducted as withholding tax and this is what I've been deducted as withholding tax for me. So then you forward those two to one of the approved collecting banks for processing. Then the schedule is uploaded to the FIRS portal, that's the tax promas or the NRS now. Sha. Then once they have accepted, you get an e-receipt. Therefore, the bank will submit what copies of withholding tax schedule and evidence of payment at the local what tax office. Okay, so this thing, okay. For withholding tax from company, remember that is FIRS or the NRS now, Nigerian Revenue Service. They would want to collect for the company, right? But the SIRS will collect for what non-companies. So now The time frame for what? For company. Remember, company is going to NRS or FIRS is 21 days, which means that if you are supposed to deduct withholding tax today, before the 21st day of the next month, you might have what remit your what deduct withholding tax. But for individual, that is the one that is going to SIRS is what 30 days respectively. Um, so now content of withholding tax returns. So each withholding tax check being payable to the revenue must be accompanied by a payment schedule. That is the list of those who suffer deduction that make up to check. Payment schedule must be obtained the following must contain the following particulars. So now this is for the person that have deducted the withholding tax, that is the buyer that wants to pay. Remember that you are not the only person that this buyer is going to buy from, right? It's not just one person. So now for all the person that this buyer has collected withholding tax, he's going to do a what? A returns, withholding tax returns. And these are the things that must be in the returns: the name of the taxpayer, their address, what is the activity, their tax certification number, which how much are they paying, um, um amount of tax withheld, balance that are going to pay or that have been paid, the contracts. Which contract did you guys enter to that mandated you to deduct withholding tax? You have to write it there. Date of payment and the check number. Now, refunds and ground for objection. Now, if you have suffered withholding tax deduction, um, and you have proof that the person that deducts withholding tax is not supposed to deduct, or you'll be like, why am I paying withholding tax? This thing I'm not supposed to pay withholding tax on it. Then what we do is to do what? um you are going to be refunded. You are going to be what? Refunded within 90 days. You have to apply to the NRS, and you have to explain to them what has happened, or the SRS, before they can give you a refund. Credit note now, where payment is made to bank withholding tax, um the FIS will issue credit notes. That is when you pay them, they will issue credit notes in favor of what? The taxpayer that you have paid on behalf. This credit note will be forwarded by collection agent to taxpayers. Then this credit note is what they are going to use to claim their tax credits when they are talking about the company income tax. That's how after you calculate, you see what deduct withholding tax. This is the like evidence that withholding tax has been deducted. So so what they are saying in this next paragraph, that it is important that presentation of a letter from collection agent showing that the taxpayer suffered deduction is not enough. So we are saying that is a must that this person come with a credit note. If your supplier or the buyer, Jare, that you received money from is telling you that I have deducted withholding tax but did not give you due credit note, around, the FRS does not want any letter from anybody saying that they are checking for. You have to follow what procedure. Um, then administrative bottlenecks and other problems of withholding tax. I think we're almost through with written aspect. Okay. Inconsistency in interpretation and application of the withholding tax rate. This means some people can twist the neck and they start defending what is not true. Bureaucracy in the process of with claim withholding tax credit. Penalty for failure to deduct. Some people remember or they don't bother deducting. Some people what don't even remember at all. Bureaucracy in the process of tax refund. It's hard for you to get your money back. So merits and demerits, I give you to go and read that one, please. What is withholding tax rates? I think I've showed rate now. Double taxation relief is DTA when a person is earning income from more than one source, usually a multinational agency. Now, but double taxation relief is to ensure that you don't tax a particular profit more than one time, right? And in Nigeria, we have a double taxation arrangement that help us to like with other countries, people that have businesses with Nigeria and with other countries, we ensure that our tax will not make them run away and they will not go and be doing business in let's say in another place and they will leave us. So now that's why we have the we leave the withholding tax that's supposed to be 10% for interest and dividend, it become what 7.5% even for royalty instead of the normal 10%. Now currency of deduction. The currency in which you use to deduct the money is what you are going to pay to tax authority. So once you pay it there, they will now do it, they want to change it to naira. But it has to be the amount at which you guys did the business say you penalty for late remittance. How much is it? Remember that for FIRS or for company, you have to file within what 21 days. You have to pay within 21 days. Now, if you don't pay, so 10% of the withholding tax not remitted is what you are going to pay. Now, you have deduct, you did not remit money, or you do not even deduct at all within 30 days, SIRS to the what do you call it? The tax authority, yes, for 30 days. Now, if you collected the money, you did not pay, or you don't even remember to collect at all, is what 5,000 naira plus the tax that you did not pay before. Then that tax I did not pay, you had interest to it, and you had imperial charges too. Oh, sorry, I'm already saying nonsense. You had interest at the prevailing commercial rate, which means the interest is not a fixed amount, unlike this one that has 10% of the fixed amount. Then the interest that you are going to be deducting here is not a fixed amount. Now let's do illustration. I think we can use our Excel. Uber Limited. Uber. Okay. I think this is better. Somebody using no pounds. Hello, I can hear you.
Yeah, good evening.
Good evening.
Sorry, please, I want to ask for we director's fee, especially
Yeah.
for director sitting allowance, is it subject to withholding tax too?
Sitting allowance,
Yes,
as long as it constitutes the fees that the director is collecting.
so it's
If it
subject to
constitutes,
withholding tax.
yes, if it
So,
constitutes the fees.
okay, for director's fee, is I think it's 15%, if I'm not mistaken.
Yes, it's 15%.
So that sitting allowance is subject to withholding tax of 15%.
The sitting allowance, is it going to be like a separate fee apart from their
Yes,
remuneration?
they have their annual fee. That's separate. They have like maybe when they sit like quarterly, or maybe there's an emergency meeting, something like that. So
I'm not
those
really
ones.
sure that one will constitute withholding tax.
Okay.
Maybe it will be under PIT. You have to the income. So it's the fee. If I can go back to the table, let me go and check it. But if it's part of the remuneration, then I would say yes. It's just director's fee, actually. Rate reflects marginal PIT rate for director. So even if they do it itself, it does not really affect because you see offset it against PIT. Okay, so we are doing Cuba.
Thank
Cuba
you.
Limited. You're welcome. Cuba Limited, a medium-scale manufacturing company, made the following transaction during the year ended December 31st, 2024. We have the dates that we have. Compose withholding tax payable to the Federal Inland Revenue, State Board of Internal Revenue. So we have withholding tax payable to what? Federal Inland Revenue Service and what? SIRS. Let me just put it beside each other. Okay. So now let's take it one after the other. Withholding tax. Okay. Number one, 250,000 was paid to Mr. Okon, an estate surveyor, for the services rendered to the company during the month. So the number one question that you ask yourself is that, does this constitute a contract of supply? Yes. Service during the month is an estate surveyor, like you contracted the surveyor to, it's like a professional service or technical service. So yes, number one. Number two is the person, that is the person that rendered the service to you. Is it a company or an unincorporated business? This one is what, a share sole proprietorship market or partnership share. I think it falls under it, right? It falls under it falls under, what's it called? The English has run away from my mouth. So what we're saying is that this person is going to what, receive net of withholding tax and not the entire 250 that they want to pay. So let's write Mr. Okon. Now, Mr. Okon will Mr. Okon pay to FIRS or SIRS? Abi, let me restructure that in English. Mr. Okon did the work for us. We are paying Mr. Okon, but we'll remove withholding tax from Mr. Okon's money before we give him the remaining amount. That withholding tax from Mr. Okon, are we remitting it to FIRS or SRS? Which one and why?
SRS.
Why SIRS?
It's an
Because it's an
individual.
individual,
Is an
not
individual.
not
Yes, God bless
not an
you.
entity.
It means you guys have been listening. So Mr. Okon is a surveyor. How many percent will we use for surveyor? Let's go back to our table. So we have consultancy management fee. Let me see if there's another thing that goes with it. I think that's the best one that goes with Mr. Okon. This one, professional fee. So professional fee for non-corporate recipients, and the person is a what? Is a resident of Nigeria. Though I don't think there's any reflection, but since the company that is withholding tax is in Nigeria, I did not say anything about the Mr. Oko not being in Nigeria, so we assume that Mr. Oko is a what? Resident. So Mr. Oko is now going to be 5% of how much? 250,000. So equals to 5%, 250,000. Then 650 was paid to Armani Limited for a fee for technical services rendered. So now, number one, is this a contract of supply? Yes. Number two, are we paying towards FIRS or SIRS? Is the company a corporate or an incorporated business?
Please, how do you know if you are paying
Depends NRS.
FIRS?
If the company is a company, a corporate business, a limited or PLC, is a company, then you are paying to NRS. Do you get? Let me put NRS up here, slash NRS, so people not start saying. But if it's an individual, as long as it's not a company, then you are paying towards the SIRS. So now, for technical services rendered, I think technical service is also 5% now. No, Lalo. 5% of 650,000. So 800,000 was paid as interim dividend to individual shareholders of the company. Number one, does this constitute contract of supply, or is it an exempt from withholding tax? No, it's not an exempt, and yes, it's going to suffer withholding tax. Number two, who are we deducting withholding tax from? Is it a company or an unincorporated person? Is it an individual? Is it an individual? So who are we paying to? Why? How do you even know that it's an individual? Yeah, they said individual shareholders of the company. Individual shareholders of the company. Do you get? Shareholders. So we are paying to who? Is somebody raising up a hand?
No, please, I have a question.
Okay.
Mhm. Okay, you said that contract of services are exempted from withholding tax. So this Mr. Okon is not a contract that between Mr. Okon and okay, that's 250,000. The first one is not a contract. Are we not supposed? We're not. I thought we are not supposed to pay withholding tax on that.
It is a contract for services rendered to the does Mr. Okon, how can I say this? To this particular, what's the name of the company? Cuba Limited. Is Mr. Okon always coming there to render estate service?
Yes.
So to this business is a contract of supply. Like they just called Mr. Okon to come and do something for them because they needed Mr. Okon. It is not in the ordinary course of business. It is not what they do to be contracting surveyors to come and do things for them. I don't know if you understand what I'm trying to explain.
The network was breaking. I didn't get you well.
Okay, let me try to use other words. So what I'm saying that this Cuba Nigeria Limited, we already know that they are a manufacturing company, right? So their day-to-day business does
Yeah.
not involve them calling an estate surveyor to come and do something for them. So it is like a one-off transaction. It's not in the ordinary course of business. Do you get me?
Yes, I get you now.
Not something that they do all the
I
time.
get you.
So it's like,
Okay.
okay, we are contracting somebody to do something for us, and that's where it ends until they need the person service again. Sha. Okay, so we are in the shareholders, individual shareholders. So dividend for individual is 10%. Both company and individual is 10%, equals to 10% of how much is dividend? 800,000. Okay.
Sorry, my network knocked me out. What is NRS?
Nigerian Revenue Service. That's what is replacing FRS, and it has already been implemented. I was just hoping that in your exam, somebody even brought my attention to it, and I really thank that because I did not think about it before. There's a high chance that you'll be seeing NRS instead of FIRS. Please don't get confused. It's the same thing. It's just that FIRS is like old name. NRS is the new name, new face, new name, sha, because of it. That's the new reform act. So now we have done the interim dividend. 18 million was paid to Binlad for the purchase of goods using the ordinary course of business. So now this one, is it um is it a contract of supply? That's the first question.
Yes,
Guys, is this July 19 transaction a contract of supply?
yes.
Yes. Who else wants to speak? All right, not to waste time because I'm zooming out, honestly. Okay. Not to waste time, it is not a contract of supply. Why? In fact, they gave it the greatest hint of all in the ordinary course of business. I already told you, in the ordinary course of business is not VAT. Why am I saying VAT now? They are not supposed to remove withholding tax. This is like the conflict example that I gave, because they used to purchase goods from Bina normal. That's where they purchase their goods. So it's not a one-off transaction. It's not a contract. It's just like normal thing that they used to do in the company. So no, they're not going to remove withholding tax from this one. So 360 was paid to management consultant Pedro. So Mr. Oh, Pedro. So this one is what? Is it to NRS or to SIRS?
Yes,
SIRS is not NRS. So why this person is not a company? See the name now. There's no limited. There's no nothing, nothing, nothing. Is what? It's not a company. So it's not NRS. It's SIRS. And it's also what management consultant 5% because 5% multiplied by 360. Then 1 million was paid to Cassie Limited as royalty. Remember, Cassie Limited is a company, so they paid him 1 million naira, which means that they are going to deduct what withholding tax. So let's go royalty for individual. How much is it going to be? 10%, because Cassie Limited is a corporate body and not a non-corporate body. So mm, royalty equals to 10% multiplied by 500,000 was paid to the directors of the company as directors fee. Directors are also individual people, they are not companies, right? Directors fees. So because they are individuals, it's going to be here, and directors fees 15% multiplied by 500,000. Okay. So now how much are we giving the NRS? It's going to be total. Okay, so that's it. So that's all. Okay. For this number two, our concern is just between tax receivable and payable. Guys, so please, I would like you to take this number two as assignment. Let us meet tomorrow. I'm not in the best of state. So it's a very simple question.
Adebola.
Yes, Adebola Nigeria Limited. So tomorrow we'll solve this and we'll move to a new topic too. Doing tax, I don't really see it in the past question. I think the only question that I saw, I don't remember which of the two is the question that I saw in the past question. Okay, no, I don't even put it here. I put it under VAT because it was linked to VAT. I know it's not common, but it does not mean you should not know it. Please just understand it quite well, okay? So, guys, please let's call it a day here. Tomorrow, conclude this last question, then we'll move to VAT. By God's grace, we should finish VAT tomorrow. I want to try to finish VAT tomorrow, so please come to class early so we can start and finish early. I guess I can close this. Um,